Hi, welcome to Forex in 4. I'm Mike Conlon for FXEDU, and in the next 4 minutes, I'm going to show you the highlights of where the action is in today's Forex market. So let's get started.
Good morning. Today is Thursday, December 2nd, 2010. This morning I'm talking about the ECB is not easy. And what I mean by that is that this morning all eyes and ears were on the European Central Bank as they came out with their interest rate decision and then the subsequent policy meeting with the statement by ECB President Jean-Claude Trichet. Now, the market was sort of expecting that we were going to get some sort of monetary easing statement, that potentially they'd go for some quantitative easing to try and smooth over the debt crisis that they've been having there recently, most recently with Ireland. Also now we've got Portugal and Spain in the mix as well. But this morning Trichet made no such comments. All right, he didn't really flip on that at all. And as you can see here from the chart, we're looking at Euro USD. Right as these comments came out, Euro began to sell off. But it was at that point where today was kind of one of those damned if you do, damned if you don't dates, because if he does decide to do quantitative easing, well, that's going to weaken the Euro as well. So either way, he was set to lose, but as you can see from the market, it looks like sort of rebounded, and we're back to risk-taking, as there really wasn't any news out there that would, change the risk themes in the market. In addition, in the Eurozone, their GDP figures came in as expected, posting a third quarter gain of 0.4%, which pushes the year-over-year figure to 1.9%. PPI figures came in a little bit higher than expected, about 0.1%, so not too much to worry about here. Also at that 8:30 time, we had initial jobless claims figures coming in here in the U.S. Right, they came in at 436,000. The expectation was 424,000. So this isn't really a big deal. I don't think this number is going to mean much unless we can get out of the 4s. Hopefully we'll get back to the 3s. If we end up at the 5s, it's going to be a lot worse. But this has become part of what we're calling the new normal. I just want to show you here Aussie dollar. Okay, you can see the Aussie's coming back now. Oh wow, good move. With the risk taking that's happened in the market. Now earlier the Aussie was lower. Okay, as the retail sales figures came in way worse than expected. They were expecting a gain of 0.4%, and they actually came in with a decline of 1.1%. So that's a big miss, and that shows that the Australian economy is slowing down, which as I've mentioned on previous blogs is a good thing, and that's sort of what they were hoping for. They don't want the economy overheating. All right, the currency was maybe moving up a little bit too far too fast, and the rate hikes are having their intended effect. So that's what we're looking at there. Just want to show you dollar versus loonie. Okay, you can see that earlier this morning, loonie's been strengthening against the dollar. We can just go back here, look at this on the let's look at this on the 30-minute chart. You can see that we're reapproaching parity here for the loonie with dollar. Now, earlier this morning, loonie was still strong. Oil was down. I'm not sure where oil prices are right now. That it still looks like maybe coming back a little bit, just slightly negative. Oh, no, yep, positive, up to 87 on oil. But one of the reasons that the loonie's doing so well is that it's sort of getting those hot money flows that come in from the Aussie. So people were selling the Aussie thinking, all right, the economy's slowing there. They're not going to hike rates. Maybe Canada's going to be the next to hike rates. And you can sort of see that also with the Kiwi as well. If we look here, you can see that the Kiwi is also a little bit higher against dollar than the Aussie is. Or actually, no, that's about flipped. So it looks like we've gone back into full risk taking. The market's sort of been a little squirrely this morning, trying to figure out what it wants to do, but it looks like now we are in full risk-taking mode. So, I'm not really sure why, people were expecting the ECB to change policy stance here. This is really no surprise. So maybe the market just got a little bit ahead of itself. But, the ECB realizes that, monetary policy alone can't, fix their economy and fix what ails them. And, maybe that's something, Bernanke and the Fed want to consider here in the U.S. They did the quantitative easing here, and by and large, it doesn't seem to be doing much of anything. So we're going to have to see how that happens. It looks like we're in for some risk taking today. Not really seeing much to flip this around. So it looks like a continuation of yesterday's move. Just want to do a quick shout out there for FXCM. They took their company public this morning, now trading under the ticker symbol FXCM. So if you are someone who invests in stocks, you may want to consider them. Great company. Work with them closely. I know a lot of people there, and they do a great job. So congrats to FXCM for going public today, and that's what I've got for today, folks. Good trading to all.
As always, be sure to check out the written blog at www.fxedu.com to get complete coverage of today's Forex market. If you would like to learn more about how to trade the Forex market from professionals like myself, be sure to check out our affordable Forex trading courses. And if you're already a seasoned professional or aspire to be one, ask us how we can help you achieve your Forex goals. Go to www.fxedu.com to get started today.